So much to talk to you about. We wanted to start there, Kevin, because you have been all over this move by the streamers to go into ad-supported tiers. Do you think Netflix can pull it off if they do something like this and sort of decrease the value for customers?
Well, first of all, nice to be here. Thanks for having me, Sarah. Always a pleasure. Yes, I do think they can do this. There's a massive amount of demand by advertisers for high-quality premium video placement. And as the linear television audiences have shrunk so dramatically, you can find those audiences being replaced in these over-the-top, SVOD services. So there's plenty of demand from the advertisers. There are consumers who I think will feel well served by having a lower price point option if they're willing to put up with advertisements. I think it works for consumers as a choice. It works for advertisers. The tailwinds are there from a business perspective, massive secular tailwinds. I think it's a great move, and I'm sure they can pull it off.
And can they pull it off and become profitable? It's really been a whole rethink by Wall Street about whether streamers can do this profitably.
I think the streaming business is inherently profitable. The pricing has come up. People are getting more judicious about their spend. They're still spending a huge amount on great entertainment product, which is where my company Candle Media comes in as an independent provider of that content. They're still spending a lot, but I think the growth in that spending has mitigated to some degree. And there's a renewed emphasis from Wall Street, not just on the top line subscriber number, but of course on the bottom line. I think that's healthy, and I think it will serve everyone's interests. And I do think fundamentally streaming is a profitable business. There is no reason that this shouldn't provide very stable and ongoing returns to the successful players.
So does Disney just have to, I don't know, hike another four times? I've already said that for my kids, I would pay a really high amount of money for Disney Plus, given their addiction to some of these movies. Is that how it's going to go?
Well, look, you don't have infinite pricing power. Look at what happened to Netflix before their last earnings call. They had a substantial price increase. I believe that the number of disconnects and the churn from that price increase surprised Netflix. I do think that, for instance, with Disney Plus, this is a big price move. Adding $3 to a $7.99 base price is very substantial. The graphic there says a 38% increase. I think you'll see some fallout from these price increases. I would have expected Disney to probably price their ad-supported tier a little lower than the current price, because even at the current $7.99 in the U.S., they only added, I think, about 100,000 new net subscribers this last quarter. So you might look for some turbulence arising from this one price increase. But I do think the prices still have a ways to go. I think it'll be done over time and titrated very carefully in the future.
Oh, so you thought that was a little aggressive. You alluded to the fact that they're spending less as they are focusing on profitability, all of them. Is that something that you're feeling in your company, that you're doing as the content provider? Are we seeing valuations come down for what the Netflixes and the Disneys and the Warners of the world are willing to pay?
No, I think there's a flight to quality, actually. I think they're not spending less. The growth in spend is going to be mitigated. They were growing at very strong double digits in their spend. I think for the next year or two, you might see that come down to single digits. But remember what Netflix is spending, 17+ billion this year, probably go up to 18 billion next year still. Disney as a whole company spending something like 30 billion on content. Just multiply that through all the different streaming services. There's a huge amount of money being spent on content. The key is having the right content, the must-have content that will attract subscribers and help retain subscribers. So branded franchises that really connect with audiences, more important than ever. There's still a substantial competitive environment in the streaming world. And if you have the goods, like Candle Media does, we're in a great position, probably stronger than ever, actually.